my approaches are even better, but it can still be good when the market's moving a lot, just a little bit less opportunity. Alright, welcome back, boys. So as you can see by the title, there is a big move on the horizon, as most of you guys can probably feel it and see it in the price action. We've obviously been consolidating now since the dump that came in late November. We've been consolidating for a couple months. Most of you guys know that the invalidations are still stacking. So there's a couple things to take note from last stream. We did technically retest an area that I didn't want us to retest, which is around here. The good news is we didn't fail through it when we did have that test, which is really important. If this would have broken down, we would have seen something similar to this, which is the retest of it. This doesn't always come in, but the retest of that liquidity is pretty common. And if that does come in, then it means doom. But the fact that that hasn't happened is a really good sign. It means that we're still maintaining structure. I told you guys that there's still a world where we can maintain structure if that's the case. But the reason why there's such a big move brewing is because we now have a new set of equal lows and a new set of equal highs. So I think this could be the move that actually, I mean, I don't like to time it, as you guys know, but I wouldn't be surprised if sometime this week we see the major move commence. Now the question is that going to be to the top side or the bottom side? The reason why I'm leaning a little bit more towards the top side, I want to take you guys back to 2018 crypto. Well, 2018 Bitcoin. So the structure that we're printing right now looks really similar to the structure that we formed here. This was in late 2018, early 2019. There's some slight differences. The differences to note is that the highs that we made here, we never actually got a new high to take out the liquidity. It might be a little bit hard to see, but let me zoom in. So we never actually formed that new high, which makes it pretty obvious that the stop losses for short sells and liquidations for short sells would not have been taken out in that case, at least the ones that had resting invalidations at the previous high. So this looks fairly similar to the move that we're experiencing right now. As you can see in this move, we also had plenty of equal lows on the way up, similar to what we have right now. The question is, will we actually see a big move that afterwards that, led to something like this? And we have to see what happens after we take out the highs, if we take out the highs. So, fractal. No, it doesn't look exactly the same. The similarities would just be, as you can see, the highs are much closer together than the lows are. The lows are a bit more spread out. We can even include that one. So the lows are more spread out compared to the highs. And then if we look at it, compare it to what's going on right now, you can see the similarities. And the main thing I'm looking for, obviously, is the same thing, which is the distance between the highs and the distance between the lows. This one actually is a little bit more exaggerated than the previous one, but it shows that liquidity is more clustered to the top side. Now the question is, will that lead to something as big as the other one? Well, we have to pay attention to an actual big move to the top side. If we see something like this, it would be quite detrimental and ultimately would likely lead to a new lower than this low. I talked about this in the past, how this is just a void. So there shouldn't be too many sellers that are looking to step in here to sell based off of anything on the chart. This is actually really similar to what happened recently in early November, just on a grander scale. So you can see here in early November, we had a bunch of equivalent highs and the lows were more spread out. And we did eventually pop it. But in this example, when we popped it, we failed back below the highs, which you can see the two tests here. And that led to a pretty devastating downward move. So same thing that happened there, just on a grander scale. So remember, just equal highs, equal lows. And then if we pop it, we want to not fall below these highs again. Falling below these highs again, likely leads to lower than 80K, just how this one led to a low lower than this low. This was around 100K, but there's some optimism because the longer that you spend in a consolidating range, the higher the likelihood that when the move does transpire, it'll actually be held. So as you can see here, we were only in this range from the beginning of November till about a week into November. Eventually it did pop. But this one has been brewing for a lot longer, so it has the capability of actually doing something bigger. So the first area obviously to pay attention to is what happens if we enter this void. If it fails it, then obviously the plan is to go lower. But if it holds it, then we're going to enter the higher time frame supply zones, which I believe I talked about in previous streams, which is these sort of high time frame levels that come to us from the beginning of 2025, those previous all-time highs where we got those huge moves that came in. These sort of areas are going to be important to watch. So 109 to 112, of course. And then 123, like pretty much hovering where the previous all-time high was. If we can manage to get here, even if we reject off of it, it's actually a pretty good sign. Because then we know, of course, that all the short sellers the last year and pretty much all the short sellers in Bitcoin's existence will be clustered above the previous all-time high. So stop losses up here after we saw this big move down. And then if we do see a rejection here, we'll see more stop losses, so they'll be shared in the same spot. But the big question, of course, is if we're taking it one step at a time, what happens if we can pop the top? And if we're even going to do that. And one of the cases where we wouldn't do that is any breakdown of structure right now. Of course, it could lead to a rebuilding of structure, but if you break down structure, it's not going to look good. So we already had a slight crack in the structure right there. But the resilience of the market has shown that demand is still quite sticky here. So we saw this breakdown, and then we saw the retest of it. So all of that was perfect. We should have dumped deeper if supply was outweighing demand. So this was kind of an abnormal move on the technicals. This is the second time we've seen this in this range, which is showing accumulation. So there's two instances so far where we've seen price from a probabilistic scenario was more likely to dump. However, price didn't dump, which shows that the demand is quite sticky, at least relative to supply. So the first example, which I tweeted about this, which we're making all these insignificant higher highs, right? So every time we go for a new high, obviously there wasn't enough demand to match the supply. Pretty lackluster. That's usually a red flag. But when we did dump, we weren't even able to get a new low that created the insignificant higher highs. So this right here is an example of, okay, well, probabilistically, we should have seen a deeper move here, but that didn't happen. So that's the first sort of, I guess, green flag in this case, showing that demand is outweighing supply. And then we just saw recently, what I was just talking about, this the structure here. It was built quite well. I was rooting on it not to start to show any signs of crack, but it did a little bit. Now, even though the structure did crack, it actually did rebuild quite nicely. So same thing as I talked about last stream, how we had all these lows where liquidity got taken in the past. Let me make sure I mark out this one too. Where liquidity got taken out in the past, right? And then once we saw that imbalance of supply and demand, we saw price hold, which this isn't that great of a hold, but I spoke about that in length before. We saw this hold, or more specifically this, and then we saw this hold. So it was geared to go, but it failed it. And after it failed it, it cracked the structure a bit. As I said, we got the retest of that, which is normally indicative of something like that happening. But the fact that that didn't happen shows two occurrences in this range where the technicals were pointing towards lower, but the demand was outweighing the supply. So then I asked myself, okay, what the fuck's going on? If the probability of it is to go lower, then why didn't we go lower? We still could, of course, but the fact that we haven't already and that we've rebuilt the structure shows me that maybe demand is a bit stronger than I'm giving credit for. And so when I zoom out, I see that, all right, well, we've got all these equal highs up here, and the distance between these lows is obviously greater than the distance between these highs. So the grander structure is starting to point towards a pop to the top, which I'm sure a lot of the Bitcoin bulls in here are very happy to hear. Now, the way this could get invalidated is if we start cracking down the structure again. So there's some equal highs even today, which was just formed in the last couple hours. Printed some new equal highs, so we have some liquidity on the short sell side of the market. What's interesting though is most of the liquidity is on the locals has always been clustered to the bottom side, but we've never taken it out. As you can see these examples, let me move this a little bit lower, but plenty of examples when we were here. A lot of the structure was, a lot of the, basically the stop losses, the liquidations a point in which a lot of people would sell at the same time because they've all deemed it as a support level. It never got swept. This never got swept. This never got swept. So it's quite impressive because a lot of while the liquidity is a bit polarized still, like we still have a lot of people who are very bearish, a lot of people that are very bullish, very close to a 50-50 market. Regardless of that, we've still seen the lows being able to hold. And one of the downsides of this is you're going to have a lot of the people who do think the market is going to go higher. You're going to have a lot of them clustered in the same spot. So breaking that could lead to something detrimental. But the fact that that hasn't happened, and the fact that a lot of things technically has happened that should lead to Bitcoin going to lower prices, but it hasn't, just shows me that, a series of abnormalities from a probabilistic standpoint lead me to believe that maybe this demand is a lot stickier than the chart is showing, I guess. So I think the move to the top is more likely at this point. The question is, will it actually hold it? And then, will we see something like this? Again, this would be detrimental. So if we are to go for it, it must be held, it must be backran. If not, that shows immense weakness and an imbalance of supply and demand on a grand scale, since this has been consolidating for the last 2 months. And then if we start breaking below these lows here, then we're going to challenge the structure again, and we could see another crack in the structure. All that will mean is one of two things. Either we're going to be consolidating for a longer period of time, which I think is a little bit lower likelihood, but it's possible, or it could mean lows lower than 80K in the event that we start breaking below 90K again, because that's where a lot of these invalidations are set. So there's been a couple occurrences where basically it looks like Bitcoin should go lower from a technical perspective, but it hasn't. Those instances are very, very bad to ignore. It could still happen, but I don't like to ignore those type of things. And so those abnormalities keep popping up, and I think it's likely that we'll pop the top. Of course, this is dependent on what the S&P 500 does as well, right? So S&P 500 is still gearing for new all-time highs. It showed incredible strength. I mean, this is no surprise to anybody, right? Like, stock market continues to go up and to the right, particularly because the volatility index bottom side structure broke. So because bottom side structure broke, pretty much been smooth sailing on the S&P. Of course, there's going to be some small little dumps and stuff like that happens in any market, but it's been quite resilient. So I don't think anybody would be surprised if the S&P continues to go higher. That's certainly where I'm thinking it's going to go. And I know that's an easy position to take because it's been doing that for a long time, but I don't really see any signs of weakness as right now. If that starts to change a bit, I'll let you know. There was some decent structure holds on the bottom side, but the higher time frame is still pretty much taken out. Gold made a new all-time high. Silver made a new all-time high. Gold's showing a little bit more weakness than silver here. Silver's been an absolute beast. The Fibonacci retracement shows around 88 for at least my projection. So that would still technically be in the ballpark of creating a daily bearish divergence. However, that doesn't look that good. A daily bearish divergence there. So we'll see how that plays out. But maybe something like this, if we see a lot of volatility, would be to take the lows that created it and then continue. But as it stands right now, most scenarios are pointing upward for silver and also gold. That hasn't changed much. You guys know I've been pretty bullish on these two for a long time now, and they're still running, which is good to see. The US dollar has rebuilt structure. It broke a little bit, but has rebuilt it. So the plan for the US dollar, as you guys know, hasn't changed. It's bullish until we get above 102. It could still remain bullish after 102, but that's where we get our answer on what the true supply and demand is looking like. So plenty of equal highs. Euro's a bit exposed here. So dollar likely going to be traveling here and then either fails it, which could lead to a low lower than this low, or it holds it and then we go back to the top of the range on a grander scale for the dollar. But as you guys know, the plan really hasn't changed much here. There's a little, like I said, there's a little bit of a structure breaking, but it was able to be rebuilt. So I didn't change the plan. I just got a little bit less confident, I should say, in the plan. But I'm back to normal confidence on the dollar. So the plan is still the same as it's been. Just the level of confidence is resumed back to normal on the dollar. Oil, a little bit of a rally off oil. You guys know the plan though for oil. Any kind of spike we get would be a shorting opportunity. Where it's at right now is kind of hands off. Unless you're aggressive, you could look to long it here. But if you're going to look to long it, make sure you're not doing it on big accounts because you're going to incur slippage if it goes south. So really the only play for oil is for smaller accounts to be able to long it here with less risk of incurring any slippage. But the long, obviously, I'm not expecting it to go run to the moon or anything like that on oil. It would just be like a swing trade, which would eventually lead to covering it with shorts. And I don't even, it's a cover with shorts, but most of the cover should be done with profit taking and then flipping net short bias pretty hard. So the 10-year is a little bit interesting to me. It's still concerning. The fact that the 10-year hasn't gone down more. Again, this is another instance of just foreigners dumping U.S. bonds. It's a concern. It's not reaching a huge point yet, but it does. It's the longer we spend not falling on the yield, despite the fact that rates have been cut and are predicted to continue to be cut. The fact that the 10-year is still floating along above 4 is pretty concerning, particularly with the structure when we look at it. It's better to look at other charts for structure, but this pretty much gives you a general idea. We could see something pretty abnormal in the bond market, which wouldn't be detrimental to the equity market, but certainly would be not a positive for the equity market. What's your stance on Powell getting investigated? I think it's just disagreement between the Fed Reserve and the administration, which is pretty unusual. Usually the administration bends the knee to the Fed Reserve, and I guess this is one of those times where it's not going to happen, which is probably a little bit risky to some people, but I don't know, the equity market is just such a powerhouse, especially as we get later into the super cycle. So Tesla made a new all-time high, but kind of failed it. The rebound so far is nice, but the play on Tesla is pretty much done unless you're still have leverage play on Tesla, or you've gone heavy risk on buying common stock. If you've done so, then there's going to be a shorting opportunity around 475. So if you're heavily leveraged that Tesla is going to continue to go higher, or you over-risked on buying common stock, there's an opportunity to look to bet against that as a hedge to protect your downside. But the play for Tesla that I've been talking about is pretty much done. Pretty lackluster all-time high, which is not a good sign. Doesn't mean that it can't go for another one and just break through this. Of course, that's possible, but it's going to be at the mercy of the broader market sentiment of most equities right now. So basically, to put that simple, if the S&P 500 continues to soar to new all-time highs in a big way, then regardless of what Tesla's technicals look like on the chart, it's likely to follow the same path. I'll talk about Ethereum here in a second, but just update on equities. There's not a lot to update on the Mag 7. Some of them are looking rather weak. Actually, the big one that I should note that looks weak is still Nvidia. But similar to what I said about Tesla, if the S&P 500 continues to soar, then Nvidia is going to come along for the ride, regardless of what the technicals look like. But Amazon's looking good right now. Amazon's probably going to get in their all-time high as topside bear structure is completely shattered. So there was a lot of things that made topside on Amazon look rather bad, but I just think the fundamentals on Amazon are so strong, which is why I've been so bullish on it. Still at the mercy of the overall market, like any individual equity, but the topside structure has been shattered. So maybe we get some kind of rejection near the previous all-time high, but it looks like it's ready to soar. If it does pull back, then to maintain structure, we're looking at around here. So that lines up nicely. So around, I'm not looking to add on personally, which is why I haven't, but at around 240, 237 to be more precise if you haven't gone on the Amazon train yet. Look at the NASDAQ. Track C showed me earlier, mega bullish, the NASDAQ. Yeah, lots of equal highs. Distance between the lows are good. Yeah, I mean it's gonna follow the S&P 500, no doubt. The NASDAQ looks fine. Taking that out and not failing was big. It's the same thing that happened on the S&P. Yeah, man, the U.S. tech sector is just still in a frenzy. of exuberance. Doesn't mean that it won't end, but certainly don't want to get in front of this huge bull stampede that continues to charge forward until it's very clear that we've changed directions via volatility. Okay, so Ethereum. This was a pretty bad failure, but it wasn't. We got pretty deep into the liquidity, which you can start to argue that these highs are a lot closer now, at least relative to where the lows are. So Ethereum's still going to be at the mercy of Bitcoin, but the distance between the lows relative to the distance between the highs on Ethereum still points towards upward movement. It's still, again, really heavily reliant on what Bitcoin wants to do, as you guys know. But even retesting 3250 on Ethereum like this, if we don't see a failure here, that means that bearish structure starts to crack, which we could see like an equal high up here. But if we do get an equal high up here, that means that we'll likely get it in the future, or we'll just go for it. So the last stand for the bears on Ethereum is really around 3250, which would be the second test of it after we've dove into liquidity. If we don't see a rejection from 3250, then Ethereum's going to soar. But still have to pay attention to what Bitcoin's doing. Otherwise, you're kind of a little bit blind when it comes to Ethereum. Do Palantir, please. Remind me to do Palantir in a little bit. So ETH against Bitcoin just hasn't really moved that much. Today's actually an interesting day because we have another sort of down period for ETH against Bitcoin, which is a little bit abnormal, but the overall past couple of months, I mean, pretty much almost all of 2025, at least starting in Q2, has been Ethereum showing strength against Bitcoin. So really, what it comes down to is if this doesn't fail here on Bitcoin and it holds, then Ethereum should soar. If this does fail, then Ethereum's going to get wrecked, obviously. So it's going to be a big decision point across the board, and this is applicable to most crypto coins out there. It's going to be what happens here. If this is a strong fucking rally, then alts are going to take off. If not, though, then the inverse is true. That because the reason why it's such a big spot is because we've been sitting here for so long, which means that the emotions in the market and the consolidation of liquidity are hand in hand. You have a lot of market participants who are very polarized, right? A lot of people don't know where this thing is going, and if someone is claiming to know where it's going, they're going to be very, very strong in their stance. So what I mean by that is, if someone does have an opinion on where it's going, they're either going to be extremely bearish or extremely bullish, and the market's kind of split 50-50 in that regard. But we have to look at the supply and demand, and we have to look at the structure, because that's the most important thing, regardless of other people's opinions. And the fact that I've seen those couple of abnormalities come in, where technicals point towards lower, particularly here and here, and we haven't seen that transpire, is just showing me that, okay, I need to accept the fact that demand is quite sticky here. When we look at the order books, we've got some icebergs getting a little bit more aggressive on the bottom side. Liquidity is pretty average right now. Nothing too noteworthy, although liquidity in the last couple of weeks has actually been rather high, which is a good sign. But it's pretty average as it stands. And like I said earlier, because of all these equal lows all the way up, all these equal lows, liquidity heat map is, let me zoom out so you guys can see it, but the liquidity heat map is showing a lot in the same area. Whoops. So a lot of there basically, when you look at the price and where it's at right now, which is right here, where is the brighter colors and where they more cluster together? It's actually on the bottom side, but it's not extremely significant because the other side is rather bright as well. It's a little bit more spread out, but liquidity is about 50-50. The only difference is that the bottom side is more clustered together on the more local structures. In the higher time frame structure, liquidity actually looks a little bit more clustered on the top side. So yielding to the higher time frame structure is generally the best way to go about it. So if the higher time frame structure says higher, and the lower time frame structure shows risk of lower, it's generally better to yield to the higher time frame because it's going to have more precedence. It doesn't mean that the lower time frame can't come to fruition and we can't see some things change, because it's not 100%. But usually you want to lean towards the higher time frame, which does actually show higher here, at least by clustered liquidity. When you look at a chart, guys, where do you think a lot of people are going to act at the same time? Let's imagine that some people sold Bitcoin, right? And some people bought Bitcoin. And they're wondering, let's take the people that sold Bitcoin, right? They're wondering if they should buy back. And they're like, okay, well, this is a pretty big area. Price has bounced off of it multiple times. If we get above that, then I'll buy my Bitcoin back. And then you look at the other side, which is people who have bought Bitcoin and are wondering, should they sell? And then you find areas where, okay, well, where do you think those people are going to be like, all right, well, I don't want to hold this anymore. I'm going to sell it if it goes under here, because it's bounced off this area multiple times. It's bounced off this area multiple times. It's bounced off this area. So this must be the demand or the support, right? And if they're in the position where they bought Bitcoin down here after seeing this massive dump, then they might feel more inclined to sell if things start to look weak. But even though that theme is present, where people sort of following the trend and showing weakness, or showing, if the market shows weakness and they're going to sell, even though that's been the case in a couple occurrences, like right here, we still haven't seen the dump come in. So you have let me say that again. Since we've dumped a lot, some people are going to step back in and buy, okay? When the local structure starts to show weakness, those people that have stepped back in to buy might capitulate quicker than they would have done if we were in an uptrend. So if this was flipped around and say we were in an uptrend, these local structures, people are not going to be as quick to capitulate because we just came from an upward movement. So they're less likely to be scared. But if we come from a downward movement, those market participants are going to be more likely to be scared if the structure starts to break a bit, because that's the trend. Now the structure has broke a bit, but the price hasn't dumped. So it showed that regardless of people getting scared, or at least some people getting scared and selling, because local structure broke, the price has rebounded. All that shows me is that demand is a little bit stickier than I'm giving credit for. Now, keep in mind, this is not guaranteed. We could still go below 80K. I think that's still a possibility. Of course, it exists as a possibility. But the probability of that happening has gone down slightly in my eyes because of what I've seen in the price action. CZ is trying to get everyone bullish so you can take the other side of the trade and liquidate everyone again. It's too big of a pool. Like, you guys probably heard that Sailor bought another $1 billion worth of Bitcoin. I think he bought it around here, although they announced it after they buy it, but I would assume they bought it around here, given their average entry. Even though they bought in $1 billion, the price still dumped afterwards, right? So it's too deep of a pool for someone like CZ or any individual to have that much influence on it. There are certain instances where that occurs, but it's usually after we've, there's a clear direction based off of where sort of the crowd is heading. So like, to put it simply, it's easier to manipulate something when you can sort of steer the crowd a certain direction easier. If the crowd is just stampeding towards you and you're not doing it in a calculated way, then you're going to get ran over. But if you do it in a calculated way where the crowd's starting to get exhausted and you kind of point them the other way at the right spot, and then manipulation becomes a big thing. But in the instance that we get a pop to the top here, after all these months of consolidation, there is going to be a stampede running forward. So unless the price action shows us that there's a huge imbalance of supply and demand, it wouldn't be advantageous to try and knock it down until it shows it on the price. I mean, he can try. I don't know if CZ's the type of guy to ever sell his Bitcoin, but Wintermute and Binance would do it, I guess. We'll have to see how it plays out, but that's the big area to pay attention to right now. And as far as like where it's going to go in the next couple hours, we're kind of just consolidating right now. So the best play, and as most of you guys have seen these last couple months, the best play has just been waiting to sell high and buy low. You know, when you're just bouncing between a big range like this, you just wait for it to get to the top, sell some, wait for it to get to the bottom, buy some. It's kind of been the play for the last couple months. There's better ways to do it. I'm oversimplifying it. There's certainly ways to be more precise and look for snipes and stuff like that, but whether or not you want a short or long is really just dependent as where we're sitting on in the relative range. So we're kind of closer to the top side. It'd be kind of aggressive to long right here. It could work out, but it is a bit aggressive. Maybe let it come down a bit more and then look for previous areas of liquidity that have been taken out. I'll look at Palantir though, because that person asked for it. And then, yeah, I can look at Monero too if you want. The video on Monero I have on YouTube from, I think it was a couple months ago, is working out fucking perfect, dude. Monero's a powerhouse. Palantir's in the same sort of boat as NVIDIA right now. Actually, it looks a little bit better than NVIDIA from a structural standpoint, but yeah, it actually looks a little bit better than NVIDIA, but it still looks a little bit weak. I don't know, I don't trade Palantir, so I haven't looked at this in a while. I'm looking at it for the first time with you guys. Okay. So, fail this, and then see what happens on the retest of the structure, which would lead to something. Well, we've already tested it. So yeah, fail this, and it could be, you could take out all the liquidity at the lows for the options traders in the last couple months. So this could lead to this. If you gain this though, then the all-time high. So the big area to pay attention to on Palantir, I guess, would be 190 a share. You should have a good idea of where it's going to go next, because you've got the local lined up with the high time frame at 190, and you've already tested through it. So 190, if price can return there, then you'll have an answer on where it's likely to go next. Sort of the decision point is right here. As far as how high it could go, I could pull out the Fibonacci retracement, but you know, these equities are sort of only limited by the money supply. As far as price to earnings ratios, I mean, we're sort of in delusional land when it comes to that kind of stuff, so I don't think that's a good frame of reference at this point. I don't think anybody disagrees with that, right? Like, using price to earning ratios at this point in the equity market, it doesn't really fucking matter. It's just, it's max exuberance, max fucking exuberance, and greed. So nobody really gives a fuck about fundamentals in the stock market right now. They just want to continue to dogpile into the winning equities, which is why the Mag 7's done so well. Yeah, I'll look at XMR right now. But yeah, to answer your question, Big Bob buddy, look at like 190 on Palantir to get a general idea of where it's going to go. Yeah, so we can look at it on Kraken, I guess. Actually, there's a better one to look at it here. Let's look at it on this. Okay, so Monero is pretty much doing what Silver did. Silver had even more data, but Monero looks good to go, man. I don't know if it's time to start looking to hedge just yet. The area that you want to look for now is if it fails back under 520. Just let me just mark this out precisely. Yeah, about 523. You can marry the local with the high time frame and get a general idea and say, okay, if it goes back under 500, then it's time to hedge. But this has been a long time of consolidation for Monero. It's been consolidating. I mean, this high from right here is from 2021, right? And then you have another high, which is very close to it from 2017. So you can even argue it's been consolidating since 2017. So nearly 10 years of consolidation on Monero. If you want to take some profits on it, I'm not going to say that's a dumb thing to do, but I don't know if you just completely sell everything, particularly if you've been waiting this long for this rally to transpire on Monero. But I think the past couple weeks has shown who the clear winner is in this market when it comes to privacy tokens, or privacy coins, which would be Monero over Zcash at this point. Which again, I covered this in a video, I believe a month or two ago before this breakout happened. But Yeah, Monero looks good, man. Again, if it can maintain above here, then it can go a lot higher. If it falls below here, then you can look to short against your holdings to hedge in the event that it goes a lot lower. Yeah, Traxy, don't they look similar though? Just all these fucking equal highs. I mean, silver, the equal highs on silver were a lot. There's even way more data. Like those highs go back longer than 10 years. But as far as like crypto is concerned, it's probably the closest chart you're gonna find to silver. Yeah, it's a nice chart. Monero's been around since like 2014, if you guys didn't know. Over here. It's a solid chart. Yeah. If you guys remember, back in the day, they used to say, oh, Bitcoin's... Like, this was way long ago, but like one of the key selling points for Bitcoin was that it's private or whatever. Of course, that got proven wrong way long ago too, but Monero's really the closest thing to a privacy coin with a big market cap. Speaking of privacy coins with a big market cap, by the way, plan for Monero is just up and to the right still. Zcash. You guys were here on the last stream. Zcash was looking pretty good, but I told you guys if we failed below that these highs, then it's gonna look really bad. So this is actually a good example. Maybe you don't care about Zcash, maybe you only care about Bitcoin. But this structure is pretty similar to what Bitcoin's undergoing right now. So in the instance that all the equal highs are in the same spot, the lows are more spread out, similar to the Bitcoin chart, right? And then eventually did pop the top. Whoops. Eventually it did pop the top, but it failed back below these highs. And when that happened, just decimation. Now the question is, okay, where's Zcash going to go next? If we do see a rally from Zcash, we want to pay attention to what happens to that area at 475. So this area right here, which we just failed. If we fail this again, then it means that we might get a low lower than that low, and then who knows how far down it'll go after that. Because it went straight fucking up, so. But if it does manage to regain this, then it's going to be sloppy. It's probably going to take a while before we see any big movements, but eventually it should go higher. It's just not really in a spot, in my opinion, where, you know, you should size up. It could do it. I could be wrong about that. Of course, anything's possible in the market, but Zcash failing that previous high is already a bad look, particularly with the volume tapering off as well. So, I mean, the stars were aligned for Zcash, but I don't know if you guys heard this. The Zcash developers, I guess, exited. I don't know how true that is. It's just a rumor going around, but the devs for Zcash, I guess they got into a disagreement and they exited. I don't know, maybe somebody in the chat can verify that rumor for me, because I didn't really look into it too much. But if that's true, I mean, that's another nail in the coffin. Which, to be honest, if that's the case, it's pretty fucking crazy that it hasn't dumped even more. I mean, that shows a pretty solid solid community. I told you guys though, this thing has been the slow cooker for so long. If you have a cult like Zcash has formed, it's really hard to bring this thing down, but we'll see what happens at 475. I don't want to take any super strong stances on this thing. But at 475, I think we'll have a better idea of what's going on here in terms of supply and demand. But yeah, as far as downside targets, there's not really much here. We'll probably have to go make a new low. Wintermute is market making this coin. Yeah, there's a lot of Wintermute's market making a lot of coins, and there's more than just Wintermute on this bad boy. I don't know. It's something where because of what's happened on the price action and because of what's happened with the dev team, it becomes less and less appealing to continue to go risk on for Zcash. They could still go up, right? There's nothing against the Zcash community. In fact, I sort of like them as a community. But if I'm just trying to be as real as I can, then you know, if you have heavy Zcash holdings, maybe look to hedge around 475. If your hedge gets invalidated, then your holdings are going to soar. If your hedge doesn't get invalidated, then you can protect your downside. Let me catch up with the chat a bit here. Humongous bag is Sui. The TA you did on Fartcoin worked. Did it really? I don't trade Fartcoin, but what did I say about Fartcoin? Wait for the top to pop, probably. Yeah. So I think, what did I say? Just like wait for this to pop, and then if it fails it, then downward move. That's pretty standard issue. This one thing is really effective, and it's actually what's happening on Bitcoin right now. Once we hit, and it's applicable to both sides of the market, but I'll just show it on Bitcoin again. Once we pop the top, or once we actually go for it, after spending a lot of time waiting, then it must actually, it can't just like half-ass go for it and then fail. Because then it means that it could go a lot lower. What's up, Ambivalent? So if we go for it here, it has to be held. It has to be background, or we just fucking send it. What about Solana? There's a lot of coins being asked for right now, so I usually go through Solana. XRP got asked for as well, and Sui got asked for. Okay, I'll do in order of market cap. So we'll do Solana first. Oh, Solana XRP are pretty much rivals. I'll do it in order of my watch list, okay? So Solana first. Plan for Solana hasn't changed. I told you guys when we were here, on Solana, wait for either the top or the bottom to be taken out and then see the retest of it. So in Solana, bottom got taken out, retest. Now we go to the other side, which I talked about last stream. And then you want to see the same thing here. If it fails it, then you can hedge. And now you have your long from here and your short from here. Both of them are in profit. You don't really care where it goes next as long as it has a big move to one side or the other. There is the chance though that we go for the top side, it actually holds it and we go a lot higher. But structure still overall doesn't look great on Solana. So it's still at the mercy of Bitcoin and Ethereum, in my opinion. We'll see how it goes, but still at the mercy of Bitcoin and Ethereum. Big supply zones, we're pretty far away from them, but big supply zones around 210 to 220 on Solana. There's one here too, but it's a little bit of a sniper level at around 190. We'll see what happens here and then see what happens here, but first step is to see what happens here. If it fails this, then, and Bitcoin's not looking good, then we could break down on Solana. Lower than this low at 95, 96. So the plan right now is just to see what happens above like 145. Did you check out BNB? Yeah, I can. XRP on the 1 hour, you said, Trexie? It's great fluidity. It's great fluidity. XRP, I swear to God, dude, the XRP fluidity is unmatched. Same thing with Tron, but Tron's been a little bit less lately. But XRP is just, there's a lot of rhyme and reason to the price movements on XRP, more so than, so basically I'm not saying it's the best coin to buy, but it's one of the best coins to trade if you're a trader in the chat. Yeah, that's a lot of equal highs. I see what you're looking at. You want this to pop. Got some equal lows too. So structure shows this, then this, okay, and then this, which is holding. Okay, fluidity is great. Failing below these lows could crack. Let me just mark this out. So here, here, and then where we're at right now, which is there. Which it looks like a little bit of a front run. Yeah. So if you wanted to trade XRP, if this breaks down bottom side and you wait for the retest of it, go low. If it cracks to the top side, then you wait to see if there's an imbalance of supply and demand. If there is, then you go low. And then if it actually does break above, then it's kind of hands off. Just let it run. Yeah. BNB. You know, it's a little bit interesting. There's more people in the chat asking for altcoins than there has been in probably a year. I don't know if that tells you anything about what could happen in the future, but usually my chat is, they're not really newbies, so maybe that tells you something. BNB, for the most part, this coin is just up and to the right, man. Lots of equal highs in the same spot. Looks good. Equal lows in the same spot too, but we're closer to the relative highs, so until that changes, until proven otherwise, it looks pretty bullish. Yeah, it looks good, man. Nice volume spike too. It's just like very similar structure to Bitcoin. So just pay attention. There could be a short opportunity if it fails it here. But if not, then higher. Wintermute is market making. He is chilling and not selling it. I track them every day as far as I can, obviously. Yeah, but Wintermute for the most part, I mean, they do a little bit of short-term, medium-term discretionary trading, but a lot of them is just market making, right? So they're just trying to go delta neutral on arbitrage market making between spot and perpetuals. But if they have a directional bias, that's usually a pretty good sign. They're usually not wrong about that. I mean, they're going to be wrong like anybody else, but they're right a lot of the time. Yeah, I don't know. Wintermute is pretty solid, so following them is probably okay if you can track them on chain. But just because Wintermute does something doesn't mean that the market's going to follow. They could easily get punished like anybody else. That's why it's always about risk management. You could be managing, you know, tens of billions or whatever. You could still lose. So just always remember that, guys. Regardless of how much you're trading, how much you think you can move a market, unless it's a really small market cap, you can still get ran over by the stampede. Drop to 90.4k to 90.6k first is my last TP, and then you can pop the top. So you want this, right? This might be a little bit aggressive. You already got some TPs on it, right, Tom? I don't know if they're going to give you this one. The only reason I say that is because we've had multiple occurrences of not getting the retest on the bottom side, which is usually indicative of demand outweighing supply, because bears didn't even have enough fucking steam to get it to the retest and the higher low. Been buying and selling Bitcoin since 2011. Goddamn, that's a real OG in the chat. You might be the most OG in the chat if you're from 2011. I don't know if anybody beats that here. The Latvian sniper, I think, is like 2012 or 2013. Yeah, I don't know. Let's pop the top. Let's get some fireworks. If you guys want to see some action today and see the orders start to roll in, we got to get above this high here. You're a freshman in college, but you've been buying and selling Bitcoin since 2011. I don't even know how old you were in 2011 then, but so you're trolling, right? I don't know. Seems like a troll to me. Oh, you were a freshman in college when you started buying and selling Bitcoin. Okay. Yeah, we've got some OGs in the chat too. 2027 here. I don't know. Wintermute, if you're watching, you want to give us a little bit of fireworks? It looks like it's good to go for it. I mean, you might want to wait a little bit lower, but... I'll leave Bitcoin up here on the left on the 1 minute so we can watch the fireworks. Oh, by the way, check out Rune. I know you guys are tired of me talking about this coin, but we finally got a little bit of a pop. We'll see if it continues. As far as ETH though goes, it's still the same spot. Bottom side, lots of stack lows, which is a bit concerning. We're in a weird spot though, right guys? Like a lot of people are polarized in terms of where they think it's going to go next. If you want Bitcoin to go higher, you just need people to get more and more bearish. Alright, we'll look at Sui. I forgot to look at it. Previous plan was if it held, it would pump, but it didn't. I don't know what this chart's pretty fucking old though. This got fucking deleted. Holy shit, look at that retest. I haven't looked at Sui in a while. Look at that fucking retest, dude. Somebody got this fat finger here. God, that's just absolute destruction. Imagine getting leverage filled on here. Yeah, this is fucking brutal. That's why you always have some stinky bids. Yeah, the exchanges kind of limit how much you can put stink bids depending on which exchange you're trading on. This, by the way, this chart right here, this candle that you see, it used to happen all the time back in 2018. So what people would do is they would just have buy orders like way down here, even when price is up here, and they would just sit there and wait. And the reason that's not why this happened, because of market makers getting knocked offline because of Binance going down. But the reason why it used to happen in the past is because you'd have people who would, own the coin from the OG days, like way back here. And then they don't understand how depth of liquidity in market and order books work. They were just long-term sort of investors like turtles that didn't really understand the technical side of trading. They just understood the fundamental side. So what they would do is they would sell all of it in one go. They'd be like, okay, I want to sell here. I'm going to sell all my holdings, and just one market order, sell it all. And the issue is, like, if you look at an order book like this on Bitcoin, yeah, it's slippage or just lack of liquidity. So you can see here on Nance, right? If you want to sell 50 Bitcoin, you could do so with pretty minimal slippage. If you wanted to sell 1,000 Bitcoin though, right, in just one order, the price would go down until it finds enough demand to fill that. And then the arbitrage bots would step in. So like, you can't just one clip 1,000 Bitcoin sell because there's not enough resting liquidity in the books willing to buy it from you. So instead you slowly sell it, right? Old school way to do that would be off the TWAP, which I don't think that's really good anymore. But the old way they used to do it, if like someone wanted to unload, whether it was like an individual person or a hedge fund or something, they wanted to unload a lot of shares or they wanted to buy a lot of shares, they're also limited to how much they can move it as well. So they'd have to use the TWAP to do that in terms of like time, how much time has passed before they hit it with another order. But in crypto back then, it was a Wild West. You could do whatever the fuck you wanted. It still is to the like that, very similar today, but even more so back in 2018. What's up, Oreo? Cool, you want this thing to dump 20%? Well, this 1 minute candle seems to agree with you. But what is this looking like right now? I don't trade Sui, just FYI, but you got a lot of equal highs. You fell underneath. Ooh, it's flirting with destruction here again. Red waterfall, please. You check dog with that? Yeah, I can in a second. Oh man, it is getting close here. Breaking down here would be detrimental. If you take out these lows and you cannot regain them, like let's say you deep dive into this, even like sitting right here, you've got so much equal liquidity on the bottom sides. And then where do you even go after that? Yikes. Sui's an interesting one though, because it kind of went on its own run when the rest of the alts weren't really doing much. Same thing with Zcash. But the crash on October certainly damaged it pretty badly. Nightbot still talks about a think tank. Yeah, that's the OG days of the Discord. I don't even know if that Discord link works since it's an old command. It might not. Yeah, I mean, more power to this community, but I don't know. We'll see how it goes. I'm not personally gonna jump into this coin right now, but maybe it works out. So I looked at Farcoin, so I'll look at Dog with Hat. It's a reunion today because I haven't streamed in a while, so everybody's showing up. What's up, Crapabella? God, I remember this coin. Dude, the fluidity on this was so nice. This thing was geared to run. So this is actually a good example because this is as like cut and dry as you can find it on a chart. Let me show it to you of how to read the structure. I guess I have to stay to the daily. So it doesn't always play like this, but this is like a really, really good example of how to read the structure. So what I'm doing is seeing where it starts to hold. So there, right? So basically, let's do this simply. This was back in the summer of 24. You can see that there was multiple tags of this low, right? So everyone's like, all right, it's gonna hold here. Look, it's holding, it's pumping off of it. Don't worry, it's gonna hold here, it's bounced off here plenty of times. It gets flushed out and it regains it. And then we see it hold the retest of it. That's the first good sign. So basically retesting where all these stop losses and validations were, or where the accumulation happened. And then you look at the next one, which is right here. So same thing, these lows are kind of far apart, but where do you think it's gonna hold? And then it holds it again. And then the next one after that, the last one was right here. So it needs to hold this. It failed it, and then the retest of that structure led to the big devastation. This is exactly the same thing I used for Bitcoin when it was at like 115K. So structure cracks here, retest, dump. That's what normally happens. Now, if this, let's say that it held it here and started to pump again, that just shows really sticky demand. It's probably gonna launch. Because what's supposed to happen is retest this into dump, but every once in a while, the probabilities, what is more likely to happen doesn't happen. And in the event that what's more likely to happen doesn't happen, that's usually a sign of a big move on the other side. But I'll show you the same thing on Bitcoin here. So I'll show you two different instances. This one's kind of hard to see, but certainly not as easy to see as that one. But all right, so you had the first sort of where all the lows at. We break down, we hold it, and then the next one, which is here, where all the lows at. We're able to get back above it, we hold it, and then the final one, which was here, where all the lows at. So like you see how this is just low, 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 reverse, hold, reverse, hold, reverse, hold, and then break down, retest into devastation. It's the same thing, right? So structure breaks, retest, and then just new lows. Now I want to show you something. This is how it normally plays out. Let me show you what's happening on Bitcoin as of right now. Okay, so same thing. We never actually got the retest down here, but I'm marking out the same lows just like I did. This one's a bit multi-legged, but okay, so the lows, same thing. This one's really hard to see, but I can zoom in and show it to you. So we regain it, we hold it, we hold it. We technically held it right here, and then we tried to hold it here. So same thing, holding it, break down, and then the retest right here, just like the retest right here. Same thing right here, but we didn't see the devastation. Why? It's probably because demand is stronger than I'm giving credit for. Because we're about to pop, yeah, probably. That's what I'm saying. It's likely that we could pop. But do you see the similarities? It's kind of hard to see if you don't look at charts very often. But it's the same thing, just like flush out the lows, see an imbalance of supply and demand, see an imbalance of supply and demand, start to regain it, then see the retest of it, see the retest of it, another retest, right? Same thing here as it is here. And then the little sniper area that's hard to see. The little sniper area, I gotta zoom in a bit so you can see it, but it's technically right here. See the little wick, and then there's a little wick. So structure's holding, structure breaks, retest into devastation. Structure's holding, it breaks, retest into devastation. But this one, we never got it. Why? Why? So that's how you read structure. And you can see where it starts to break. So I told you guys here, uh-oh, structure just cracked. Now, of course, as I normally am, I'm optimistic about Bitcoin's future. So I'm like, okay, well, we can rebuild it. But if you hear me say structure's cracked, then we already are in a bad spot. Now, I've seen it be rebuilt before, which is why I was optimistic here. And is why I'm being optimistic right now, because I've seen it be rebuilt, and it's actually doing it this time. But in both scenarios, you have equal highs, or where all the short sellers dogpiled into the same spot. So this was the structure back in October, right? This is the structure now in December, January. You can call this failed accumulation. I just say that the structure broke. But it's both the same shit. And failed accumulation just means that regardless of the accumulation that was occurring, demand still outweighed still stampeded through. So like now what's next is, in this scenario, it would have been, if we had the same thing, right, and actually held, then it would be to pop the top. And then we see what happens here, because this is the ultimate test of supply and demand. What's happening here and what's happening here is a very complicated way to read supply and demand. The simplest way to read it is just to wait till it pops it. And then if it fails it, then you know supply is overwhelming demand, and then you get a new low. In this case, lower than that low. In this case, lower than this low. But if you hold it, you're gonna fucking send it. And the reason why I think there's a chance that we could send it is because the abnormalities. But what does sending it mean? Sending doesn't mean that we get an all-time high immediately. I mean, maybe. In an ideal world, that'd be lovely, right? But we still have to get through the supply zones. And that really starts to occur at the previous all-time high that we made in January of 2025, so about a year ago, around 109.5 or 110, like right here. We get through this, then new all-time high. We don't, then we could go low, like a lot lower. So when I see these kind of things, if I'm expecting a pop to the top, right, then what I can do to protect my risk is, if it does pop to the top, then I can look to short it here. Not selling all my Bitcoin, or not selling all my long positions, rather hedge against them with a short. Because that way you don't really care where it goes. I mean, depending on if you're net long or net short, ideally, if you're net long, you'd rather have your short sells getting validated. That way your longs can continue to run, but at least you're protecting the downside, the event of the downside. The momentum. The thing is, like, the argument about momentum is, the reason why I talked about the 2018 thing here is because, like, look at how bad the momentum was for the bulls here on 2018. Like it looked just dusted, right? Like, look at that momentum. But then what ended up happening was the reversal, right? And then retest supply zone, dump. Retest supply zone, dump. And eventually, maybe a year, 9 months from now, we go on another bull run. But it is odd that altcoins haven't seen much life still. I guess the people that were speculating that the meme coin market has absorbed a lot of the alt money we're probably onto something. I didn't really, because of the market cap sizes, I didn't really agree with that too much, but it seems like they're onto something. That the meme coin markets have taken a lot of liquidity out of the quote-unquote utility tokens. Yeah, CPI might be the catalyst that sets it off. I don't know. But we do know one thing, right? This thing's ready to move. It's the next move on Bitcoin is going to be a big one, whether it's to the top side or the bottom side, regardless. Because you can't consolidate for this long without having a big move. It's just, the reason is because think about anybody who's opened a trade in the last 2 months. I'm not talking about a scalp. I'm talking about either a swing trade or a position trade. In the last 2 months, invalidations are sitting here, invalidations are sitting here. Every single day, more and more people add invalidations here, and more people add invalidations here as they open up new trades. And it might not actually be a non-restrictive order. It could just be a psychological thing. Non-restrictive order being like an actual stop loss or liquidation. There's also the psychological levels, which is, you know, people are saying, oh, don't worry, Bitcoin's going to reject off this. Don't worry, Bitcoin's going to bounce off this. And then it doesn't. And then what do they do after? Then there's greed or there's fear. Kind of new to trading Bitcoin. I was in a buy and it was flying, then crashed. Now I'm kind of confused. What's it about to do? It's been up and down. What do you recommend? It depends what kind of trading you're doing. If you're new, you should probably stick to swing trading. But when you're in these kind of ranges, it's not a bad idea to take profit because the higher likelihood that it's going to bounce there's a higher likelihood that it's going to continue to bounce in the range than it's going to break out. Now, eventually it will break out, but we don't know when. Nobody does. So the advantageous play would just be take profits when the position is in your favor to a certain degree. Like, you don't just want to immediately take profits, right? But once you've locked in a good amount of risk reward, then it's okay to take profits. Now, we are getting really close to a big move on Bitcoin, but it's still more likely that we continue to bounce between the range. Aren't these so-called utility tokens actually meme coins in disguise? Some of them are. It depends. Is the coin profitable? Which is a crazy thing to say, right? How can a coin be profitable? But some of them are. This one, for instance, is profitable. The PE ratios, I think, are around 10. And look, it's fucking devastated. But I don't know. I know you guys are probably annoyed because I've been bullish on this coin and it hasn't done that good, but I still think that it's going to do good because the fundamentals are good and the technicals are good. You have an incredible amount of volume that came in, even despite, you know, it looking done and dusted. And Brewing actually makes money. So I think it'll do well, but it could take a while, right? Sometimes most of the time, volume definitely lags against price, or vice versa. Price lags against volume. Price never lags, but volume does, I guess, is a simple way to put it. But if you're new to trading Bitcoin, or just new to trading in general, there's a lot you have to sort of familiarize yourself with. You need to. So first off, it's not easy, right? The internet makes it look like it's easy. It's not. It's really difficult. In fact, it's probably one of the most difficult arenas you can compete in. The reason being is because there's the most amount of money to be made and lost in this arena. There's more money to be made and lost in this arena than the NFL, the NBA, pretty much anything in the world. So it makes it the most competitive. So you need to understand that first, right? Like what kind of game are you playing here? You're playing against some of the smartest motherfuckers on the planet. And then you need to respect probability, which a lot of people don't give respect. So anytime you enter a trade, you can lose. It doesn't matter if you've done, 10 hours of research, 20 hours of research on one trade. You could still lose. The stars could align, and you could still be wrong. The other thing you need to understand is nobody knows 100% where it's going to go. This is true for any financial instrument. Now, you might look at old heads in the legacy markets like, famous investors or famous capital managers and see like, well, those guys have been right very often. Well, one of the reasons why they've been right so often is because they bet the market's going to go up and the market's traded against the dollar. It's not very hard to be bullish. You just buy and hold and wait for the dollar to go down in value, and then your assets go up in value. It doesn't take any fucking skill. You just buy and hold. But the reason why that has worked so well is because we just devalue whatever it's traded against, not because they're investing geniuses. So you need to understand that nobody knows where it's going to go for sure. Your safest bet is to bet that it's going to go up in the long term, but that's only if the dynamics of the market stay the same. Meaning, we don't have deflation or stagflation. It continues to be inflated. You need that to occur in order to just be dummy mode. Okay, and the next thing you need to understand is that you cannot time the market. Can you check out Buttcoin? Sure, Buttcoin's gonna do good. You can't time the market. So nobody knows when it's gonna pop. But from looking at a chart, I can tell you like, oh, it's getting really close to popping versus it's probably not. The crow with knife coin? I don't know what happened to that. Those guys who came in here and spammed their meme coins. You check out the daily candle on corn. Oh. That's still working out though. Yeah, corn's still working out. Now you can get your retest though, Tom. Potentially. Let's see what's happening on the local here. So if you don't know, you can actually trade corn, the corn futures. But commodities just look so good, dude. I think we're going to see the return of the commodity markets. I mean, we've already seen it with precious metals, right? But even stuff like this, I think we're going to see it soar, which would suck because the middle class would get squeezed hard if commodities rally. But it could be an opportunity. What if I don't eat corn? Then you can't trade it. It's a prerequisite for trading it. You have to actually eat the corn. There's not much I can report here, though. It looks pretty random. Never underestimate the greed, Traxy. Never underestimate the greed. You think we're at the dot-com bubble? Okay, so I'm gonna sound like a dummy here, but what did the I think it'd be interesting to look up how much. Well, first off, when did the rates start to be cut in the dot-com bubble? I'm almost 100% certain that they started to be cut after the dump came in, not before the dump came in, which is a different dynamic than what we're seeing right now, right? So if we look at like what normally the Fed does is, okay, market corrects, now it's time to cut rates. Whereas this time we're at all-time highs, but we're cutting rates. That's I think a big dynamic that separates this market versus pretty much anything we've seen. Maybe there's some points in history where that happened that someone could correct me on, but the other thing is, why isn't the yield going down? Rates are being cut, but the 10 year's floating. What the fuck's going on there? So I think the dynamic like this looks like different than .com in that aspect. I think it looks still more similar to the 1930s. or late 1920s. This is one of those situations where it's really hard to look at history for an answer because the dynamic is so fucking different. And that happens when both technology and inflation are just going like this. Like, this is the history of technology for humans. And now we're at like this part. So it's changing so fucking fast. Like, most of the rise of technology is slow and gradual, and then you hit the fucking parabolic move, which changes a lot of the dynamics that we've on a big scale. This chart, by the way, is the same thing with inflation too. This is a technology chart. It's an inflation chart too. They're both going up like crazy, like never before seen, because it compounds. Everything compounds. If I go to bed with a position open, I'm shitting myself. Yeah, just need invalidations. Hope that there's enough liquidity in the books to be able to get stopped out. Anyone taking profits in their retirements and waiting? What, you like waiting for like the S&P to correct or something? Cancel? I don't know. Another red flag, obviously, is precious metals rallying. You don't really want to see precious metals rallying, because what does that normally lead to? Missing out on too many. Dude, you're playing hard mode, Traxy, and you're crushing it on hard mode. The reason why I say you're playing hard mode is because you're taking advantage of like the scalp moves without having the bigger swing on it. It's very impressive. It's really, really impressive how you trade, because it's even more difficult. Only capturing the small move without getting the big move means that you need to be really, really good at capturing the small move consistently, which is probably the hardest thing to do. ETH's still kind of dumping against Bitcoin. Bitcoin's in the driver's seat right now. S&P is very close to cracking 7K. Because like one of the big things in trading, in my opinion, if you don't want to play on hard mode, which by the way, trading is just hard mode in general, but like expert mode, I guess, is like, let's say that you scalped along here and you like took profits all in this little window on the lower time frame. Well, if you kept a little bit open, you get so much more out of it. You want to make money when you're sleeping, not when you're just awake. So I'm saying, dude, like, even just leaving 10% of a position open, if you have high time frame confluence, you have to have high time frame confluence. You have to have, like when you're, like you could scalp, let's say that the high time frame says the price is going to go up. You could scalp short, but you shouldn't expect that short to turn into a big runner. Same thing for longs too, right? Like let's say the price looks like it's going to go down on the high time frame. You could scalp long, but you don't really want to, try and keep that open as a runner because the high time frame is showing you that's more likely to go down or it's more likely to go up or whatever. But if you have high time frame analysis that's telling you that it's likely to go up and you have a long, close 90% of it, leave 10% with stop loss and profit, and let's see where it goes. But you do want to make sure that you use isolated leverage, not cross, because then you can sleep better, knowing that even if what happened on October 10th happens again, your risk is still managed because your margin is the only thing at risk, not your whole account. I've said this a million times. Well, the biggest advantage we have in crypto is the isolated leverage. Isolated leverage is a fucking game changer. And it's honestly needed for the crypto market because things like October 10th happened. Liquidity a little bit shallow today. Come on, Bitcoin, you want to give us a pop? Give us some action? No, I have a lot of respect for your discipline though, Traxy, because you knew silver was going to go up, just like I did, but you didn't want to take the risk. I mean, look at the fucking the silver chart probably haunts you more than anything, right, Traxy? But yeah, silver looks like it's still good to go. Monster fucking move. And yeah, I mean, silver could have crashed too. Honestly, there was a couple times in silver, if you guys were here when I was streaming, you probably heard me say the term like divine intervention. Honestly, the way that silver was trading, there was a couple times where it could have completely collapsed. Like this one, for example, look how fucking close it got, and then look at the fluidity that came in at the perfect fucking time. If the price of silver would have dipped below 34 when it was sitting at 35, I don't think we'd be in the same fucking area on silver where we're at right now. I'm sure it would have recovered at some point, but we certainly would not be as high as we are. Look how fucking close it got. And because it didn't, look what happened after. Then we look at like the fluidity of silver there. Look at that. I feel like right here was the divine intervention, which just took it to the moon. This happened on the 29th of June. Must have been a full moon on that day or something. It's also kind of easy to find big moves in altcoins, in my opinion. You just buy near 4-year cycle lows. It's going to wait for 20 equal highs, some reclaims, and overall nice structure. So you're just waiting for October this year, and then you're going to go all in on the best looking altcoins? We'll see if they want to run before then. Because there's been occurrences where Bitcoin has dumped in the 4-year cycle and altcoins went on a run. Good example of this was the 2018 altcoin rallies, which this looks so eerily similar. There's so many things that look so similar to the 2018 rallies. Which maybe that's my bias, like coming in. I'm thinking that, you know, trying to see what I want to see on the chart. But one of the things that really does look similar is this chart and this chart. Hold on. Where we're at on Bitcoin right now. So this right here, and then where we were on Bitcoin in 2018, 2019, like sort of the end of the reset of the 4-year, right here. See like the similarities between these two charts? Yeah, I was looking at Litecoin a bit today. I'll look at it with you guys here in a second, but do you see the similarities there? The only difference though in these two charts is when Bitcoin was here, the altcoins were going crazy. When Bitcoin was here, the altcoins didn't really go that crazy. Shorts are fucked. No, I'm not saying that. The shorts still could work out. It's just a probability. What's up, Magic? Yeah, I mean, Litecoin looks pretty good. We're having that retest soon. This daily dip that you guys are talking about, it's pretty good. There's just a decent amount of data between it that I'm not a huge fan of. Lots of equal highs all the way up on Litecoin. God, Litecoin looked so good before Bitcoin crashed. There's some alts that looked really good before the Bitcoin crash just decimated their technicals. Alright, Tom, so stick with me here, right? We know that there's a lot of invalidations here. Right here. And we know that this is the area to look for. So because there's a lot of invalidations here, most of the time, we should slide into liquidity. And in this case, we might even make equal lows. But if we don't slide into liquidity and we bounce perfectly off of it, while also considering all these invalidations here, that would look really, really strong, right? So what I'm saying, guys, is there's a lot of people that are gonna sell under here via stop losses or liquidations, because we bounced off this area a bunch of times. We were in this range from the 19th of December to the 31st of December, so half a month. We were right here. And so if people still had long positions here, all their invalidations should be in the same spot, right? So what that means is that all these people are going to sell at the same time, which means normally we should slide lower if everybody's selling at the same time. But if everybody's selling at the same time and we don't slide lower, but we just bounce off of the previous time that happened, which is right here, all the invalidations in the past. And that just shows immense strength. And when we look at the other side of the market, we see that there's a bunch of short sellers in the same spot. And that's sort of the theme all the way up. There's some instances where it's not, but all the short sellers are in the same spot. There is a soft spot. I do have a soft spot for Litecoin because it's, you know, it's been around for so fucking long. So I do want it to do well. So maybe I'm being a little bit biased, but bias aside, if we see strength here and it doesn't slide below and demand comes in at 75 a coin, that'd be pretty impressive. Can you look at hype? But yeah, it's as far as the daily bull dip here on it, Tom. It doesn't look as clean. There's a bit too much data in between it. And a lot of the time, I like to see. A lot of the time when I look at like bull divs, I like to see like a huge drop and then like a really tight bull div like that. That's like the ideal fucking bull div. This one is a little bit more messy, where you had the drop, but then you had sort of like consolidation before, and then a lot of data in between. It can still work, but the target for that would be these highs anyways. So you might actually end up clearing since there's equal highs, so you have a lot of short sellers who will buy at the same time. And then if this whole thing breaks, then your last stand on Litecoin is right here. At 63, 64. Because this is already done. Yeah. You could get a lot more out of it too, Tom. So I wouldn't close the whole position after you get above those highs, unless we start failing below it. Then what you could do instead of closing it is you could look to hedge. So if we do this, you get your profit, some of your profit targets, leave some of it open, and then if it fails it, then hedge here against whatever's left open, and then you're neutral. So whatever's still open after you take profits, do the same thing on a hedge, maybe a little bit smaller if you're more bullish, and then you can let it float here and then decide where it wants to go, with both of them sitting in profit. Yeah, I'll look at hype. Oof. I don't trade hype, just as a FYI. Yeah. Look at this fucking structure. Just the fluidity from the bears here was. God damn. I don't know. I don't know where this one's gonna go. Probably lower, but I'm not confident. I mean, this is a good inbound. This is a good start so far because you just took out all these lows. So now maybe something like this, but I don't know. It's probably more likely to go lower unless Bitcoin carries it. So same thing. I mean, short here, long here, hedged. If it goes low, it goes low. If it goes high, it goes high. Doesn't really matter once you're hedged, right? There's some huge whales that get liquidated below that low on Hyperliquid. This one? Yeah, I mean, they absorbed a lot of liquidity here. If that was their plan. Because if you wanted to buy a lot of hype or you wanted to go long on a lot of hype, you could do it right here because all these people are going to sell to you at the same time. Oh, this one? Yeah, I don't know. We'll have to see then. You want to see the bigger high time frame stuff if it does end up rallying is you want to see what happens at 26. This is the bigger hedge. Like if you're... How big is the liquidation? I mean, if the guy wanted to be smart about his risk, he could hedge against his position here, and then his longs will do fine if it soars, and he'll lose a little bit money on his shorts. But I mean, this thing's still in a downtrend, and the topside structure has not been cracked yet because we're not anywhere close to it. Topside structure is still really solid here. But if we do start to crack the topside structure, then all-time high. But we're really far from that right now, so I can't say that's going to happen. We'll have to see. I didn't really go through AMD, but it had a little bit of a pump today. It still has bearish structure here, though. I think it's going to follow whatever NVIDIA does, most likely. NVIDIA still is in bear territory. But the good news is that there's a lot of equities or stonks outside of the Mag 7 that are doing really good. There's been this theme of like, okay, NVIDIA carries up the market, and then when NVIDIA gets weak, the rest of the market tries to carry up NVIDIA. And we see that happen again and again and again. Like, for instance, Walmart's up 3.5 points today. 3.5%, sorry, not points. And by the way, when people say like, oh, there's recession-proof stocks, like just buy Walmart, buy McDonald's, buy beer companies, it's not really the case. It's not really how it works. They'll bounce back quicker, but you can see that like Walmart didn't dump as much as other things dumped. It still dumped, and this is the COVID dump. If you look like the 2008 one too, like it didn't dump as much, but it still dumped. It's not like it's gonna go up when everything's going down, but it'll recover a lot faster than everything else. Same thing with gold and silver. They're still gonna dump when everything dumps. They'll just recover faster. Because what's happening in the tech stocks right now, I mean, if we're being honest about the tech stocks, it's not very different from Bitcoin. Like, yes, these companies make money, but what are their price to earnings ratios? I mean, is it even realistic at this point? It's greater fool theory across the board at these prices, which is people are buying, they're not buying Apple right now because they think, oh, Apple's a great company. They're buying Apple because they want to be able to sell it at a higher price. Some people buy Apple because they think it's a great company or whatever. But at the price to earnings ratios that we're at right now, really all it is just buying into the Mag 7 or buying into the stock market because you want to sell at a higher price than you bought it for. Unless you're getting paid dividends, or unless you expect them to just be really aggressive with stock buybacks, it's the same shit. Which there's nothing wrong with doing that. I mean, the dollar's getting devaluated, right? Dollar is losing value all the time, so of course these are going to keep going up until we can't maintain the float. Could we see Intel make an all-time high? Maybe. Maybe. I mean, anytime you have the government buying into a private company, it's usually a good sign that they're not going to let it fail. Because the government has unlimited money because they can just print more. I don't know. If we were in a fair market, there would be no fucking bailing out companies that go under, because I know that sounds controversial, but we shouldn't, if we're going to be in a free market and competition is going to be a fair playing field for the people at the bottom to the people at the top, no one should get bailed out by, well, that's not true. We could bail out companies in order to save the market. But I think it's kind of unfair to pick and choose which ones we do that with. When marbles times 2? Oh yeah, I do owe you guys a game of marbles. I'll launch it right now. Alright boys, if you're AFK or you're tabbed into another window, we're starting up marbles right now. I guess if you're AFK you wouldn't hear me, but if you're tabbed into another window or you're an audio listener, we're starting up marbles. Yeah, get your rigged in ahead of time, boys. Say rigged ahead of time so you feel better if you lose. Okay, here we go. Pook TV, that is way too close. Alright, so if you want to join, it's !play to join. Just copy and paste what the people are putting in chat if you want to join. If you win, I'll gift you a sub to the channel, and then whatever you ask for in the chat is what we'll all look at next. Can't even rig it properly. And then you're gonna want to do ! boost, of course, right? You've never won? Alright, I'm gonna rig it for you then, Pook TV. So you know if Pook TV wins, then it's rigged. Give you guys like 30 more seconds, I'm gonna start it. CZ rigged you? What does CZ mean when he says super cycle? Because super cycle, when I hear that, it sounds bearish to me. Like, have we not been in an upward trend for a long time? For a super cycle? So wouldn't the super cycle coming just mean that it's reversing? super cycle as Peloton. Alright, here we go, guys. Good luck, everyone. He's baiting shorts. Got a lot of first-time chatters in here. Are you guys from the YouTube? Or just Twitch discovery, I guess? You didn't make it in, Tom? I gave a good amount of time for people to get in, but I guess they're trading in the background right now. Alright, Drifts Park, one of the OGs of the stream. There's actually a lot of OGs in here. Has the lead with Maddie Ice and Smoke X TV. First obstacle comes in though, and they all get stopped on it, so the rest of the pack can now catch up. Shazam, another OG, is going to be our leader unless somebody has a nice run here. It's going to be Richie who has the nice run. Ends up being in the front of the pack by a nice margin. Boys Don't Cry in the top two though catches up. Now we have a new top three with Potillo, Boys Don't Cry, and Richie. We're heading into our second jump and our next set of obstacles here. Uncle Rick goes down. Boys Don't Cry now has the lead, going to be the first one to take a stab at it. If the platform's in a good spot, they should be good, but they go over and they go down, so everybody else in the back of the pack has a chance now. Afro tries. Potillo, who was originally in the top three, goes for it. Platform's not in a great spot, and they go down. Lots of people dying here. And it's going to be Cashlaw who wins it. Cashlaw wins it. GG. If you didn't win, remember to type rigged in the chat. Alright, Cashlaw, you've been here for a while. You know how this works. See, if it was rigged, then Pook TV was going to win. ZRX? Holy shit, that's an OG coin. You guys remember Stellar? Uncle Rig? No, his name's Uncle Rick. Alright, Stellar Lumens. That's what ZRX is, right? It's been a while since I've looked at this thing. Volume's still pretty consistent. Just gonna mark this out, because we did make an all-time low, at least on Binance. Fairly recently, looks like on the October move. Okay. You gotta change, Uncle Rick, you gotta change your name to Uncle Rig now. Alright, we got a lot of stack liquidity to the top side. Fluidity still looks pretty good. Hold on, I gotta zoom in a bit. Alright, that should be good. Okay. So, a little bit of a front run of that equal low. We have a lot of equal highs, so short's pretty obvious where they're at least the perpetual ones from last year. Okay. If you lose this, then you have a little bit of breathing room to retest here. If you lose that, then you get another all-time low, it looks like. Or there's a high chance to get another all-time low, so you need to hold this. If you don't hold this, then you have to hold this. If not, then you could go to an all-time low, way down to the void. Topside stuff is a bit more difficult. Just take it with a grain of salt here. I'm not very confident in my analysis of this thing. It doesn't look like it's very influenced by leverage. So it's going to be pretty random how it moves. Looks like the spot market is really driving most of this price action, which makes it really hard to predict. Versus if there was a lot of leverage, it'd be a little bit easier to predict. Okay. Yeah, I can't give too much advice on this, dude. I'm not really sure where it's going to go. Like I said, if there was more leverage in this thing, I'd be able to be more accurate with it, but it's pretty random from my eyes. The volume's okay, so let's look at it from a spot perspective. The volume's still pretty solid, all things considered. It's pretty consistent, good volume across the board. Maybe at a new all-time low, if you want to be hands-off on this thing, what you could wait for is a new all-time low. And then if you see that and you see a spike in the volume, then it looks pretty good. It's terribly drawn volume nodes, but look like seaweed or something, but terribly drawn. But if you see this, like higher volume than you've seen in the past, and you reclaim the previous lows, then it looks good. Until then, it's kind of hard to say that it's gonna continue higher. The reason why is because if you get an all-time low, that means the coin is dead, right? Well, maybe. It's if you have an increase in volume that you've never seen before at an all-time low, that's pretty interesting because it shows that there's more activity on this coin than there ever has been. At the same time, you're getting an all-time low. It also shows capitulation. I mean, if it did this, right, and it just had a dive bomb and had a lot of high volume, that's not as good. But the key thing you have to look for is the trading activity around it when it's capitulated. Because most coins, particularly meme coins, if it does this, the volume is still dried up. That shows that it's pretty much dead. But there's signs of life if the volume is higher. Then there's signs of life to reverse it. Just a simple question you have to ask yourself. Why are there more people trading it than ever, even though it's at its lowest price it's ever been? That's all it is. But yeah, I can't help too much on like where to buy or sell it right now because it looks pretty random as to where it goes. Remember guys, most of the time price movements are random. There's some times where they're less random, and those times are more frequent if there's more leverage in the system. Because leverage in the system means that people are forced to either buy or sell if the price moves too far against them. If someone is forced to take an action, and let's say a bunch of people are forced to take an action at the same time, then it's more predictable. Can you look at the OG coin CHZ? It went kind of opposite of Bitcoin after a big sweep to nearly zero and no volume coming in. Also has its kind of soccer token for the upcoming World Championship. This Tezos? Chili's? What the fuck? I haven't looked at this coin in so long. What made me draw an arrow this low though? Guys, I haven't looked at this coin in like a year. Why did I draw this so deep though? That's what I don't understand. Does anyone have the recording of when I did this? I don't know why I had the arrow so deep though. No, I know this was a long time ago because I don't even remember this thing. Somebody probably has a recording of when I did this. That's fucking crazy. Volume's kind of low on it. You asked for a long time. Do you remember when you asked for this? And do you remember why I drew it like this? I must have been in the zone right here. Why did I say that it was gonna go this fucking deep? Because I don't even... If I was you guys, I wouldn't even believe this. I don't even believe it, and I did it. Do you remember why I said it was gonna go this deep? This is really not normal for me to do this. Hard to explain in my words. All right, well, that's pretty crazy. Probably said something like could fall like this in the void. All right, I'm gonna delete it now, but that's crazy. When did this happen? On October, right? Yeah, there's no way I would have known about the October thing that long ago. I'm guessing you're already long on this, or you already have spot buys on it? Just wait to see what happens. It should happen pretty soon. It's hard to, I can't predict the future, but it should happen fairly soon. So wait for this to get cleared. If it holds it, then you're fine. If it fails back below the lows, it's good to short hedge and then look for the retest of it around here. Yeah, I don't trade this one personally, guys. I don't. Something like that looks fine. And I don't. In the old streams and recordings, I used to speak about why I put lines and circles the way I put them. If you ask me, okay, why is the circle there? Why is the line there? I'll do it, but I just assume that a lot of the people in here are OGs and they don't need me to explain it a bunch of times. They'll probably get annoyed if I do that. But there's a rhyme and reason to the madness, right? It's not just like, I'm not just drawing random fucking lines. There's a reason why they are where they are. If this does hold though, let's see how high it could go based off technicals. Wow, you have a lot of equal highs. The only thing that concerns me here is the volume is still pretty shallow, particularly on the capitulation wick. This is where you'd want to see the volume come in. The lack of volume there is pretty weird. You see how the volume has just been tapering off? Oh, you were Nail TV. Okay, well, welcome back. Yeah, if not, then it could soar. But the area you want to pay attention to is right here. Because it'll tell you if you're going to do this or if you're going to do this. And for the new people in here, I'll make it simple, okay? If somebody had shorted this thing in 2025, from the second quarter of 2025 until now, so pretty much a whole year, it's likely that their invalidations are above this high. Because if they weren't, if they were here or here or here, price has already gone through them. So all the invalidations for short sellers inside the range have been invalidated, which means that the remainder of the invalidations should be at the high or above them, particularly when you go straight down, because there's not a lot of reason as to why someone would put a stop loss up here or here. There might be some here and here, like obviously there's going to be some, but where's the cluster of them? It's likely going to be at these highs. So once you take out the short sellers, you're going to have a bunch of buys that come in on the leverage markets. That temporarily moves the price up via arbitrage market making, so it pulls up the spot price as well. But if there isn't enough demand in the actual spot market to match the upward movement that was caused from the leverage market, then you see an imbalance of supply and demand, and that leads to like a cascade because all the longs start jumping in when you get a new high. People will call this a false breakout or whatever, but that's the actual mechanism of what's happening and why it's a quote-unquote false breakout or whatever. But if you do hold it and you don't go below this previous high, then you can soar because there's not really a lot of reason as to why you couldn't. Maybe like right here and right here, but that's about it. And those aren't super big ones. And then you have another situation where you have all the short sellers in the same spot again. So you get above that, same thing. You either fail it, see an imbalance of supply and demand, or you soar. So the way it works, right, is you guys have heard the term market making before, right? Or liquidity provider, pretty much the same thing. A little bit of differences, but pretty much the same thing. And what they're doing is they're providing liquidity so that you can easily buy and sell at the price that you want to buy and sell at. Now, how they're able to do that is they use the difference between the spot price, which in Bitcoin, the spot price is right there, and the leverage price is right here. So the spot price of Bitcoin right now is 91,920. The leverage price is 91,870. So there's a small difference between these two. If the leverage market pushes it up, the spot price will follow because they're taking advantage of the difference between these two prices. But if there's not enough actual demand to back the move after the price goes up, then it'll fall right back down. Because the leverage market, when you leverage buy Bitcoin, you're not buying actual Bitcoin. Only on the spot market do you buy actual Bitcoin. So a lot of shorts get liquidated at the same time, which pulls this price up. And it'll pull this price up at the same time the spot market. Even though when shorts get invalidated, when a short gets liquidated or gets stopped out, it doesn't mean people are buying Bitcoin. Oh, there it goes. Look at that. It just follows the fucking arrow. Who's in here right now? But you see how they follow each other, right? But if there's not enough actual demand, and there you go. It just happened right there. But if there's not enough demand in the spot market to actually follow the move that was caused from the leverage market via arbitrage market making, then it reverses. But these moments where a lot of leverage gets crushed at the same time allows us to see the true supply and demand of the spot market. So we basically get to like look into the crystal ball or behind the door when a lot of people lose at the same time, because it forces an event that shows us the true supply and demand of the spot market. And then once we know what the true supply and demand is, or close to what the truth, we'll never know the absolute truth, but close to the truth of the supply and demand, then we can take advantage of it and have a probabilistic edge on the market. So if they're taking advantage of the difference between the price here and the price here, what they're doing is okay, so for this instance, the leverage market is trading at 91,955. The spot market's trading at 92 flat. So there's about a $50 difference between the two. So what they're doing is they're longing here on the leverage market, and then they're selling Bitcoin here on the spot market, and they're capturing that difference of $50. And they're doing that again and again and again and again. And this ends up providing liquidity. Now, because these two are trailing together, because somebody's taking advantage of the difference between the two prices, when this goes up enough, because shorts get invalidated, this will follow it. But it'll be temporary if it was a short squeeze or if there's actual demand that pushed it up there. And then we can see that happen live in the price action and take advantage of it. So basically, wait for everyone to lose, see what the price does, and then there might be an opportunity. That's like as simple as I can make it. Maybe I could explain it a little bit better, but and when this happens on a grand scale, on a very big scale, the probabilities shift in your favor enormously. Damn, this song is a banger. Okay, now the question is, do we get action? Well, here's what we're looking at, right? Where's the next spot where there's going to be a lot of people that lose at the same time? Here and here. So if we get above this, you'll see a lot of green orders come in at the same time. Those aren't people buying, those are people closing shorts, which will pull this price up, the spot price up. And that's why I say like fireworks. When I say fireworks, I just mean a lot of people losing at the same time, because it gives a lot of action. And it's not like a moral thing where it's like, oh, are you happy that a lot of people are losing? It's not necessarily that I'm happy. It's going to happen regardless of what I say or what I do. It's just going to happen. It's the market. People are going to lose. Can't change that. It's the nature of the fucking game. So when a market has a lot of leverage in it, it's easier to predict. That coin that we were looking at earlier, ZRX, the Stellar coin, because there's not a lot of leverage in that market, it's just fucking random how it moves because it's just a spot market. There might be some things I can derive from it, like the volume and some certain instances where downside liquidity is in question, but upside liquidity, no. Because if there's not a lot of leverage in it, then nobody's shorting it. If there's not a lot of leverage in it, well then, if the market participants in the spot market are active market investors, then you can kind of play around with it on the bottom side. But the top side, no. You need a longer arrow. Okay, does that help? No, the markets are just bouncing right now. I'm not confident in that arrow. But that's why you want to trade markets. If you're a trader, you want to find a market that has a lot of leverage in it. Like, other than that, if you want to trade a market that doesn't have a lot of leverage in it, like penny stocks, you have to do the Latvian sniper method, which is you have to do fundamental analysis followed with volume analytics. If you can marry volume analytics with fundamental analysis, then you can participate in markets that are less leverage. But there's no real such thing as fundamental analysis in crypto markets for the most part. There is a little bit, depending on if the coin actually makes money or not, but most coins don't. So it's, for the most part, there's not really a lot of fundamental analysis in crypto. There's some, but not nearly compared to like looking at a balance sheet or earnings or something like that. An income statement. Balance sheet's way better than income statement, but you don't have either of those in most crypto coins. I think the chat would prefer that I had a bunch of indicators on the screen because that's going to tell us where it's going to go. Let me just let me put some indicators on so that everyone understands. All right. Now I look like I know what I'm talking about, right? Much better now. If I have a bunch of indicators on the screen that you don't understand, then I must know something. And these little like liquidations that come in, if you want high probability trades that win more often, the reality of that is you're going to have less opportunities, less trades, but the probability goes up. And you have to wait for bigger liquidation events. Could you please accept a side hustle as a voice actor? I don't know if I'd be a good voice actor. You need to add VWAP to be ultra cool. Yeah, we need volume profiles and heat maps, bubble maps, and all that other shit, right? Then we're really cooking. Which, I know I'm talking shit. When I first started, I also did the same thing. Indicators, as many as I could add to a chart. That must be the reason why I'm not winning, is because I don't have enough indicators. So I am talking shit, but at the same time, I went through it too. Everyone does. You think that the answer to trading is that you don't have enough indicators, you're not looking at it from enough angles, when in reality you should just be mastering the one angle. Like, instead of learning a bunch of different techniques, master one technique. And I think the best technique to master is the price action, but it needs to be founded in your understanding of why things are happening. You can't just be like, oh, it usually does this, so it's going to do this. You have to understand, why it's actually doing what it's doing. And all it comes down to is liquidity, which is a really overgeneralized term, right? People just say liquidity, and then, what the fuck does that mean? What it really comes down to is how many people are taking the same action at the same time, and what does the market do after that happens? And when it comes to crypto, it's the relationship between the spot market and the leverage market. Because the market makers who are using arbitrage to market make, which is probably the most popular form outside of discretionary market making, are using the spot price and the leverage price, and they're farming that over and over again. They're just farming that $50 difference between the two prices again and again and again. The more advanced firms will take discretionary stuff. They'll be like, okay, well, we're going to be a little bit heavier on our shorts or a little bit heavier on our longs. All right. There was a part where I talked about how the leverage market and the spot market, the relationship between the two and stuff. That should probably be clipped, but I'm gonna call it here today, boys. We'll do the next marbles on the next stream.